Welcome. Let's take a look now at some of the events in the diary for us traders as we embark out another week. It's the week starting Monday, the 29th of May, and there's nothing on Monday, either in the UK or in the US because of an extended weekend. It's the Whitsun bank holiday, or the old Whitsun bank holiday we had used to have in days gone by, which is now just the end of May, and it includes a day off as well for Memorial Day in the States. So there's nothing across the board. Let's take a look at what's happening Tuesday, though, because we begin, first of all, very early in the morning with the unemployment rate coming through from Japan. We've seen a lot of activity recently in the Japanese economy, suggesting that things are beginning to pick up, certainly moving away from that deflationary environment. We'll have to see how the jobs market is going as well. We get an insight to that early doors on Tuesday, 30th of May. Eurozone economic sentiment a bit later on the day, and later on still in the US, we get the Consumer Board consumer confidence number out in the States along with home prices. Let's take a preview of what's happening on Wednesday. I guess the really big event on Wednesday, of course, is the maturity of the discussions around the debt ceiling and the budget. One assumes that they will go through to some sort of a deal and we won't end up in a default on Thursday, but we'll have to see how things go. We are getting very close as we go to recording this particular bulletin just before the weekend. We'll have to see how things develop over the week ahead. Japan industrial production, early doors on the Japanese markets, retail sales as well. NBS manufacturing PMI data out in China. A little bit later on, we get the final reading of the first quarter GDP number. You remember in Germany, we've seen on the confirmation that the German economy has gone down into recession. That's not going to happen in France because we know that the fourth quarter was just above the contraction line. German consumer prices as well out on Wednesday, and later on in the day, job openings in the States and the Fed beige book. Let's take a look at the economic diary for the first day of June, Thursday, China Caixin manufacturing PMI and German retail sales. And because we had that day off on Monday in the States, we are a day later for the private payrolls number. 1:15 p.m. Thursday, we get the ADP employment change, also the weekly jobless claims and the ISM manufacturing index, as well as the EIA weekly crude oil inventories. And rounding off the week, Friday, 2nd of June, non-farm payrolls, one of the big economic events of the calendar to watch out for. And we'll be examining that number to prove that the US is headed for a soft landing. We'll have to get some more details on that as we see more economic data produced. And that was certainly the message from the last Fed minutes of the meeting that we saw released recently, saying that they are very much data dependent. So it's a big number to watch out for. Non-farm payrolls on Friday at 1:30 p.m. Axel Rudolph, IG's chief technical analyst, joins us now with his thoughts on what to watch out for. I guess one of the big things, of course, in the week is definitely going to be that debt ceiling. But what else are you watching, Axel?
Well, Jeremy, I think also German inflation data for May is going to be interesting, especially now that Germany is headed into a recession, as you just mentioned. And basically, from a technical perspective, the DAX 40 chart also looks extremely interesting. And as you can see here on the daily financial bed, we are hovering just ever so slightly above the early May low at 15,659. For me, this is really the line in the sand, because if we were to close below that next week, perhaps on a stronger reading of German inflation, who knows, we may well be in for a period of declining prices with regards to the DAX 40, which could then take us perhaps back towards the March lows around 14,459. So this is really the key support level to watch out for with regards to the medium-term trend for the DAX 40, this 15,659 low on the daily financial bed. Now, provided it holds and can see a bounce off it, then perhaps we could reintegrate the previous uptrend. But as I said, since Germany is now in a recession and because of the general less optimistic mood to do with equity markets at the moment globally, it'll probably be quite difficult for the DAX 40 to rise all the way back up again towards its multi-month high that we saw earlier this month at 16,333, which actually was an all-time record high. So perhaps what we might see if we hold in the support areas, further sideways trading as we saw for much of April and early May of this year.
Okay, let's taking a look at one of the markets to watch out for from the economic diary. Let's take a look at the corporate diary, which is even more sparse. And we joined this week on the Tuesday, the 30th, where we get Hewlett Packard. Second quarter earnings. The company's now called HP, of course, since it's spun out its business services and printer business. HP after the bell on Tuesday. And you can follow this, all sessions, on the IG platform. WH Smith's trading statement at 7 o'clock in the morning. It's the only thing we've got to look forward to at the moment, at least on the calendar, for Wednesday, 31st of May here in the UK. And a little bit later on in the day, Salesforce first quarter earnings. And let's take a look as well what's happening on Thursday, the 1st of June. We start off at 7 o'clock in the morning here in the UK with the footwear company Dr Martens on its full year numbers. And later on in the day, 3 companies to watch out for in the States. Broadcom, second quarter. And we got first quarter numbers out from the computer company Dell and the cut price stores business Dollar General, first quarter earnings. That's Thursday, the 1st of June. I said it was a sparse week. That's it. Axel, not much to choose from. But if you were pushed, what's your choice?
Dr. Martens, again, because of the share price and for technical reasons. I mean, as you can see on the daily financial bet here, since the beginning of November, it basically dropped by over 50%. And this happened on several profit warnings. And these had to do with the operational issues at US distribution centers and unseasonably warm weather, which led people not to buy Dr. Martens boots. But as you can see here, we've been trading in a sideways trading range since mid-April, and provided we hold above the orange line here, the 55-day simple moving average at around 153 pence, it is possible that at some stage we will eventually break out to the upside of this trading range. And that would mean we would have to see a rise above the mid-May high at 174 pence, in which case the 200-day simple moving average here, the red line, at around 196 pence would be the next upside target. So when you have trading ranges like this, which are quite tight and which have been going on for quite a while, quite often a stock price then, when it does break out of this sideways trading range, does accelerate either to the upside or to the downside, depending on which way the breakout's going to happen. But you can see that here we had the similar situation back at the end of March, and then suddenly we had a nice breakout to the upside pretty swiftly within 2 or 3 days. So I expect something similar to happen around its full year earnings with regards to Dr. Martens. And from a fundamental point of view, it's also quite a cheap stock if you want to be a longer term investor, because with around earnings being around 9 times, it's trading around 9 times earnings, basically. That is relatively cheap when you compare it to the FTSE 250 10-year price to earnings ratio of around 20. And if you throw in a 2% dividend yield on the stock, it might actually be a good long-term investment, provided you have a stop loss below the March lows, which were made around the 127 pence mark or so. So maybe that's the one I would go for.
Yep. Okay, Axel, good choice. Thanks so much indeed. And as I said, a sparse calendar looking out to next week, but there are some little elements of interest to watch out for. Just to quickly recap again, the no trade in the US or on the cash session or indeed London, but you can trade the indices 24 hours starting early on Monday morning, right the way throughout the period. Just can't trade any individual stocks. It's just a reminder about Monday's trade. And we'll be back on the early morning call Tuesday morning, 7:30. Hope you can join me then. Have a good weekend.